Hi, I'm Jared Dykes.
And I'm Matt Fox. We're owners and financial planners at Prospective Wealth Planning, and this is our weekly market recap for last week.
We'll be going over a few different things this week. First off, I'll be touching on the returns from some of the major indexes from last week, and also I'll be touching on the S&P 500 and a couple key levels that we're looking at moving forward.
I'm going to be covering the news from last week, and then finally we'll wrap everything up with our thoughts going forward.
As I mentioned before, I'm going to be touching on the major indexes and some of the returns that there were from the previous week. So I'm going to start off with the Dow Jones and the S&P 500, which are both major indexes for U.S. stocks. The Dow Jones down 0.67% for the week, and the S&P 500 down almost 1.5% for the week at 1.35. Both of these indexes down about 2 to 2.5% for the year. The NASDAQ, which is basically tech stocks, down about 2% for the week, but still holding steady, up a little bit over 0.5% for the year. Foreign stocks were the only ones that were positive for the week, but overall year-to-date still a little bit negative. And emerging markets down about 0.75% for the week. Year-to-date, again, along with the NASDAQ, one of the two that are actually positive still for 2018. I also mentioned in the beginning of the video that I was going to touch on the S&P 500 and some key levels that we're looking at moving forward. What we have in front of us is a chart of the S&P 500 from July of 2014 until today. As you can see, with the first gray circles is what's called a double bottom in the market, which happened the end of 2015 to the beginning of 2016. As you can see here with the double bottom that looks similar to a W, what we saw was the market dip, rebound a little bit, and then go a little bit lower. From there, the market rebounded up through the highs that we have seen through the beginning of this year. What we're hoping for is that we have a similar setup that has just happened in the S&P 500. If you look a little bit closer to the top of the chart, there are two gray circles there. We have a potential double bottom there, which almost looks like a condensed W, not as drawn out as it was earlier, but we're hoping that that similar setup is something that we're going to see moving forward for this year. A second indicator that we look at, which would be the blue line on the chart, tracks pretty close to the 200-day moving average. What this is a general bullish or bearish indicator. And as you can see now, with where we are today at the end of the chart, we're still above that blue line, which means, as a firm, we're still bullish on the market at this point today. That was it for the charts and the key levels that we had, and I'm going to pass it back over to Matt to talk about some of the news from last week.
Last week we've seen two major pieces of news come out. First, on Thursday, the jobs report came out for the month of March. The U.S. economy added 103,000 jobs in the month of March. That was short of expectations, which was 185,000. Although we were short of expectations, we still have strong jobs numbers when you look back last year at this time. The unemployment rate is also remaining at 4.1%. But the thing that moved the markets the most last week was that on Friday, President Trump demanded that we have another $100 billion worth of tariffs be added against China. As soon as that information came out, the markets had a sharp sell-off, ending the day down over 2%. And that's everything that we wanted to cover from last week. And this week, the whole world is going to be watching to see how China responds to Trump's threats of adding an extra $100 billion worth of tariffs.
Hopefully a trade war doesn't escalate between the United States and China, because that's something that could definitely affect the markets. Again, what we're watching on the S&P 500 is the 200-day moving average, and also we're watching that double bottom to see if we remain bullish on the market.
Thank you for watching this video, and we strive to give you everything that you need to know about the markets in 5 minutes or less.
If you like the content from the video today, go ahead and like our Facebook page, as we'll be posting these videos once a week, or click the button below, enter your email address, and what we can do is send you an email every week with this market update.
See you next week.